Hey, what's going on, everyone? In this video, we are going to dive into market structure. I'm going to break it down step by step, show you how price really moves, and give you the foundation every trader needs to see the market clearly. So sit back, pay attention, and let's get right into it. Before we talk about entries, liquidity, or any strategy, we have to talk about market structure. Market structure is the foundation of everything you learn in this bootcamp. If you don't understand how price moves, every indicator and strategy will confuse you. So today, we slow things down and we learn how to read price. This bootcamp is for beginners and intermediate traders. My goal here is not to make you trade every day. My goal is to help you understand the market. Because once you understand price, you stop guessing and you start reacting. We start with structure because the market does not move randomly. It moves in patterns. So now, when we say market structure, we are simply talking about how price moves on the chart. And as a forex trader, we actually have to understand that price forms highs and lows. That's it. So it's either it moves up, moves down, or it's moving sideways. So if you can learn how to read highs and lows, you can read the market even without the indicators. Market structure gives you direction first, and direction always comes before entries. If you look at this chart illustration here in my PDF, you can clearly see the direction of this market. So now, looking from my left, the structure right here was in a bullish formation, or it was a bullish structure. Afterwards, we saw the market shift structure from a uptrend to a downtrend. That is, we can clearly see how the structure formation is from this high to this low here. So by our left, we can see a swing here, which is a lower low, right? And right here, we can see a lower high. So now a new lower low is being printed, giving us a lower high. As a trader, if we want to trade this particular formation, you will not want to counter this particular formation, but rather you want to flow with the trend direction. Because looking at this very clear, we are bearish. Whatever thing that gives you a reason that, okay, we'll have a order block right here, and then you want to long to target the next strong liquidity or target maybe this swing high. There is no single reason for you to do that, because looking at this particular price action here, we don't have any reason to long this market because we don't have a change of character. But then after this particular first position where you forced yourself to take a buy or a long position, the market started buying and then it broke below the structure, giving you a new swing, which is a lower low. And anyone who tried to short this market, the market never stressed the person and then aggressively traded down to hit the take profits. So as a beginner trader or an intermediate trader, we have to remove emotion and then let the structure lead us. So now this part is very, very important, because as a beginner trader, you might hear names that might be so strange, and when you're new to something, you are new to it. When you learn about it, you know about it. So now, there are only 3 market conditions. So we have the uptrend, the downtrend, and a range. So now, looking at this, we can see the formation of this particular candle structure. You can see it's moving from a low to a high, and from this high, it printed a new low, and from this new low again, it gave us a new high. So now, this is the uptrend formation. You can see a higher low, a higher high, a higher low, and a higher high. This particular structure here is in the uptrend. The buyers are the ones dominating at this particular point in time. So in the downtrend, a high, a low, a high, and a low. With this formation, we are in a downtrend. So when we are in the downtrend, we want to target the next jaw on liquidity. So in this case, we are talking about the lower low. So we have a lower low, a lower high, another lower low, which is around here, and then a lower high and a lower low. So coming to the range, we are just trying to talk about the market failing to break out of the range, because when we talk about a candle range, we are just talking about the high and the low. So when the market fails to break above or below the range, we are talking about a consolidating market or a range market. So now, if we look at this candle formation, we can see how aggressively it is, how aggressively or large it is. So now, the next formation, we were supposed to see this, where the market will print higher highs and higher lows for us. But in a situation where it fails to break above or take out the high, and then it trades inside or back into the range, right, giving you some formations or fractal structure inside the impulsive leg of the trend, you say the market is ranging. From the previous example, you should be able to understand what the uptrend is in this particular PDF here. So when we say uptrend, we talked about uptrend to be a bullish market, right, where the buyers are dominating. So now in the uptrend, you see the market printing higher high and higher lows. We had an impulsive movement from this higher low to this higher high. We then saw the market drop slightly, which is a pullback, and then again left this particular swing here, which is a higher low. So if the market respects this every time it keeps it, you know that that trend is still in the uptrend. And then if it prints this, which is a higher low, and then pushes to the upside to break a structure, which is a break of structure, that is why I gave this abbreviation. BOS stands for break of structure. So when you see a break of structure happens, and then a pullback again, which is this same structure that you see here, is a pullback, we are then waiting for the market to target the next high, which is giving us a new BOS, but it's based on some conditions. The condition is we don't want to see this violated. What we want to see being taken out is just the high, and we are not interested to see the market take out this low here for us to call this a uptrend. In a situation where the market doesn't take this, but then it takes out this low, that is where you say a change of character has happened, right? A change of character is also said to be change in state of delivery, because the state of this delivery was in a bullish trend where the market was printing series of higher highs and higher lows. But in a situation where it does not print a new higher high, but then takes out the higher low, what we see the market has done is it has changed its character. And this is the first sign of a trend shift. It's not telling you clearly that the trend has shifted from a bullish trend to a bearish trend. It's just a signal, right? And when you see this, you have to be conscious. You cannot tell me you saw this formation in a bullish phase and then you still want to look for long trades. Yes, you can look for long trades, but when the market has to push above to take out this guy here, and if it does so, the trend stands to hold the ground of an uptrend. In a downtrend, price creates lower lows. And what I mean by this is just trying to tell you that the sellers are in control. Every push which you see right here, the buy you see here is a weak push. This is a pullback. So in an uptrend, you are seeing a lower high and then a lower low, another lower high and a lower low. So now that you have seen a lower low being printed and this up push, which is a correction, right, or a pullback, we don't want to see the market break above here, the lower high. If it tends to break above or breaks the lower high, we are saying the structure is no longer bearish or in a downtrend, but it's trying to tell you to be very conscious that the trend might likely shift from a bearish trend to a uptrend. So in this particular formation, if the high tends to break, which is the lower high, the trend has not yet fully shifted from a downtrend to an uptrend. But this is just a first signal trend shift. It's just trying to tell you that this structure might be more in favor of the buyers at this particular point in time. But all of this, you have to get confirmations to know clearly that this trend is now in full control of the buyers. And again, I want to say this is a signal caution. Like this is just telling you, be conscious, be careful. The trend is about to shift. Now that we are on the real chart, we want to understand what the uptrend is. So when we say the uptrend, we're talking about the movement of the markets in this formation. So when you have a structure like this, we are moving from a higher low, a higher high, a higher low, a higher high, a higher low, and a higher high. So this formation is just trying to tell you that the buyers are in full control of this particular market. So now, if the market violates this or breaks above this, what do we have? We have a break of structure, right? And again, if it pushes up again to break above this guy, what do we have? We have a break of structure. But in a situation where we see the market violate this low, which is in course of the market buying, it sold and then broke below this, you are in a different environment from a bullish market, right? So now, this formation is a bullish formation, right? Let's start our example from this all the way from the right side. So now looking at this particular structure, we can see you had a low which is right here, and then we had a high, which is this, right? We have a high. So now this environment, or from this structure, we can clearly see that we are in a bullish trend. We have a low and a high. So this is what we call a higher low and then a higher high. So now there is a low that must be protected, which is this particular low here. For this market to continue being in this particular environment, we want to see this being protected. So if I should mark this and extend to this side, which is this higher low, and then extend to this side, I don't want to see the markets move like this and then take out this. If this happens, I will know there is a change of character or change in state of delivery. And my next move is to look for trades that flow in this particular direction, which is a downtrend. But since we have not seen any formation of such, whatever trade I want to take in this environment is to target the next draw on liquidity or to flow with the market. So now we have a new swing, which is a higher low. So now that we have printed a new higher low, if the market sold from this high down to where we printed a new higher low, whatever buyers I should be looking to have seen this particular structure is to look for trades that will trade to target this particular structure, which is the next jump liquidity, or should I say this particular swing high. And we had the market push from this and then target the high. So after that, we still had a new structure, which is the swing high, right? And the swing high is our higher high. And after this higher high was printed, what did we see? The market still did what we call a pullback or a retracement back into our trading range here. And it gave us a new swing, which is our higher low. So now, after we had the higher low, if I want to get involved in this particular market, I will want to trade higher. I won't be trying to counter this market to say, okay, I want to see it trade to this low. I won't be doing that. What we have to do in this market is to make sure I'm trading to target the next drawn liquidity. So now, this is the recent swing high, right? And then we saw a pullback. And after this, we also saw the market trade to the upside, giving us a new swing high, which is this. And the new swing high is what we call a higher high, right? So now that we have a higher high, if this trend wants to continue higher or in the uptrend, we don't want to see the market trade to take out this swing low, which is our higher low. So now, the formation I talked about earlier was if the market moves like this from a low to a high and then it breaks the low, we will be looking for opportunities to trade lower and not to trade higher, because there is a signal that the trend will most likely shift, or the trend is about to shift, right? Because if you look at this clearly, this is a swing low, a swing high, and then a low. So you call this your higher low, a higher high, and then a lower low. So it depends on what structure the market pushes back to us that will determine if the trend has shifted or not. So The structure now we had here is a change in the state of delivery, or you can say a change of character, right? So let me illustrate that. This is a change of character. We'll have it right there. So if this market wants to continue going lower, which is this structure you see here, we want to see the market pull back. It could be in the EQ, maybe trade to somewhere like this and then target the next job liquidity. This is just what the market should do if it's interested to continue going lower. We don't want to see the market push to the upside like so. If it does this, then our structure now is to look for opportunities that will trade us higher and not to trade us lower or to go to the downtrend. And in this case, we can see the formation or what the market did. We saw something like this. And then we had a break, which is very clear. Now, having this break, we saw a pullback giving us a new structure, which is a higher low. Like so. So have a higher low. You can push it to say, okay, this is my higher low. But then the structure is formed somewhere around here, which is where you clearly say, sorry, this is your lower low. Sorry about that mistake. You have a lower low right there and then a lower high. So now having these structures clearly, we have the lower low and a lower high. If you understand the structure of the market clearly, what are you going to look for in this type of market structure? You'll be looking for opportunities that will take you lower, right? So now, this was it. This is real hard. The shift in market structure. So having this shift, this is the low that printed this. We had a pullback back into this range, giving us a lower high again. If you are to trade, you'll be trading to target this low, which is your lower low. And again, we had a break of structure to the downside again. If you want to trade lower, then we want to say this high, which is your lower high, must be protected. But in this case, you can clearly see this wasn't taken out. So since this is being broken, you have a change of character. You have a change of character, which is a change in status delivery from a downtrend to a uptrend. So if this is to hold or the market is to continue going lower, what do we want to see? We want to see the market printing series of higher highs and higher low. This is just how the structure of the market is. So in this case, we have a higher low, say higher high, higher low, higher high, higher low, and the higher high. So now let's shift this to this other structure. So now we have a low, which is this, the last swing low before we had a change of character. So if we want to see or trade to this direction, we want to see the market respect the lower lows or the higher lows. So now we have series of them, but most of them are just form of liquidity where the market targets or then they sweep them. But then you can see how the market kept respecting them till we got to this structure, right? It must not be always clean. And again, we'll have a higher low, 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 a higher low. We don't want to see the market violate them or take them out. So now in this particular situation, we saw something like so, which is this. This was where we had the transition from a uptrend back to a downtrend, but then we had a failure swing right here, which we printed a lower high, but then this did not lead to any change in the state of delivery. We never had the candle closure below this, so this still stands as our major swing high. So now we then had the market break below, which is this. So if we want to look for our opportunity to trade, we want to look for our point of interest that will trade lower. So in this case, I will not be talking about entries, but then for the entries, I'll be talking about that in my next video, which I personally use candle 3 closure for my entries. So now, since we have a swing high and then a swing low, we want to see the market respect this high and then trade below this low right here. And then you can see what happened. We moved from the higher high to a lower low, and then from a lower low to a lower high. And then from this lower high, we printed a new structure, which is this again, which is this particular structure. So now, looking at this particular structure, we had several of these fractal movements where we had a bullish trend in this particular leg of a bearish trend. So if we want to see this market push to the bearish side, we want to see this being disrespected. So now we have the market break above this particular structure here, and we had a candle closure, right? So now what we see here is we are more in the bullish environment. So if we have the markets give us a shift in market structure, our main target will be to target this high, which is right here. And that is how you trade in the bullish or in the bearish environment. So in the next video, I'll be talking about how you trade fully, how you get your exits, your entry in the bullish or in the bearish environment. So now, going to the consolidation or the range market, we'll find an example, which is, let's use this as an example on the price chart. We have this particular structure, which is right here. And if you look at this structure, you can't tell that the market is in a bullish phase or in a bearish phase. But what you see is the market being in a consolidation phase. And when we say the market is in a bullish or in a consolidation, in the range or in the consolidation phase, neither the buyers or the sellers are in full control of the market at this time. Their strength is equal. Look at this structure, which is here. We have the low and then a high and then a low and a high again. So from this, we had this. So now this structure, if we look at it clearly, you don't have a defined trend. Rather, the market has been dancing from a zone to another zone, which is we had this particular low, which is here. And then we have a high, which is here. So for me myself, I don't trade in this type of environment where the market trend is not defined. But for many traders who would love to trade in this type of environment, which you have the market doing something like so, it moves from this is a low and then a high, it pushes back into the range, and then you might see a fractal structure being formed, a bullish fractal structure, which you see something like this, and then back up to this structure, and you see another structure forming, all in this trend leg where you have something like this. So when you are trading in this environment, what you want to do is to buy at the sell at the high and then buy at the low, which in most of the cases you see the market bouncing from this back to this. But then how do you then trade this particular structure? Maybe that's what I'll be talking about in my next video also, when I'm talking about how to enter using the market structure. That's how you trade in an uptrend or in a downtrend market, and how you trade the consolidation or in the ranging markets. So if you found this video helpful, kindly like and subscribe, and also don't forget to turn on the notification bell so that whenever I upload videos like this, you'll be notified and you will come and watch. Thank you.